Hey guys, good afternoon. It's Sunday, January 20th, 2019, 3:10 p.m. New York time. And I made this video on Friday regarding an outlook on the Euro Kiwi based on Elliott Wave patterns. So you can go back and watch that. I posted it Friday. I'm not going to rehash that. But I wanted to show you what I see similar setup on some of the British pound pairs. And so I wanted to go over those too. But just briefly, just to refresh that, this move down on the Euro Kiwi on the daily chart was a perfect 5-wave Elliott wave trend, and then we had a wave A, and then this is B, and then this is C. That's still yet to come, the way I see it. And remember, on these corrective patterns, this is what they call a zigzag pattern. If this is how it plays out, which is a 5-3-5 pattern. So, and you can really, if you go down to a lower time frame, you can really see it. But on this wave A, which would be 5 waves, you can see it right here. 1, 2, 3, 4, 5 is ABC down. And so at some point, we'll start moving back up. If I look at this on the lower time frame, if this is the end of the B right here, this price action right here is not really all that impressive right now. So I'll be waiting for confirmation for this uptrend, for this, hopefully this wave C to get going. But that's what it looks like on the here down on the 3-hour chart. And it's not really doing too much right now. I'd like to see some more confirmation, but I basically am going to be waiting for this to go back up. So I just switched gears here really quick. And again, you can finish watching the video from Friday, but a few of the British pound pairs are kind of looking the same way. So here's the pound Swiss, and again, to me, this looks like this was this is a 1, 2, 3, 4, 5 down, and now it looks like maybe we're already in wave A here, or possibly this is just a new longer term uptrend. But so I'm concentrating on this area right here. And this is how I have it drawn for now, as 1, 2. This was probably wave 1. This might have been 2. And then I think going up, at least how it looks now is that, and again, I'm on the 12-hour chart, that starting right here is the beginning of wave 3. And I don't think wave 3 is over yet. I think this is 1. And this move down right here with this candle, this big wick, is probably wave 2. Let me go down to a lower time frame here. This could be 1, 2, and I think we're in 3 right now, and I don't think 3 is over yet. So if that's right, this will be 1, 2, 3 of 3. Now we're in 4 of 3, and we'll go up again for 5. Then we'll have a little bigger correction, and then eventually we'll finish out the larger wave 5 of this whole pattern. So I think this move down is just a correction again to wave 3. That starts right here, and we'll go up somewhere to about this area. So that's what I'm thinking right now. And so it's similar to the Euro Kiwi in such that, it precedes a pretty aggressive downtrend that has a good pattern. Not as obvious as the Euro Kiwi, but it's still, a downtrend that ended here. So keep an eye on that, So still some pretty good upside potential. I would say, you probably get at least 300 or 400 pips before that move ends on the pound Swissy. Pound Aussie looks, the same. Again, I'm really concentrating on just this price action here. And you can see this Fibonacci I got on here. So I have this right now drawn as the A from this downtrend. This is the corrective A, but this could just be a 1 too. I don't know. But for now, I have it labeled as an A. And so we have this completed trend here. We don't have a really nice wave 4 here. We got this big exaggerated wave 2 right here. 1, 2, 3. This is probably 4, and then up for 5. And then this B, you can see it went right to the 61.8 retracement, almost to the pip, and then it's going back up again. So I do think ultimately we'll end up in this area at least, because actually if you measure it, that takes you right to here. It takes you right back to this previous high. So because as I stated in my last video, A and C a lot of times It's not a rule, but it's a guideline that wave A and C are usually about the same length. So just for projection purposes, you could kind of project this up here. Now, I get people ask questions, well, is wave C going to be the same length as wave A? And again, as I said, it's a guideline, it's not a rule. What you end up having to do is you look at the internal structure inside the wave C. Because as I said a few minutes ago, wave A and C are 5-wave patterns. So an ABC correction is a 5-3-5. So wave C would be 5 waves. So when will wave C end? Well, you go to a lower time frame and you look for the structure of the 5 waves. And this is just a target area up here, but it might not go that far, or it might go a little further, So it's not a guideline, but it gives you an initial projection to say, okay, this is about where I think it's going to go based on the length of wave A. But always go by, what the internal pattern says. Remember, the smaller wave patterns are building the larger waves. So, or another way to look at it is the larger waves are made up of smaller waves on a lower time frame. All right, so just remember that. So that's pound Aussie, and pound Kiwi looks pretty much the same. Let's see. Yeah, I already looked at pound Swiss. Pound Kiwi kind of looks the same way, although I think this one may be ending that initial trend. I don't have this labeled. So the two that I'm really focused on is pound Swiss and pound Aussie. So if I had to keep two, no, this is pound Canadian. That one's not as clear. So pound Swiss, pound Aussie are the two that I'd be looking at that look very similar to the Euro Kiwi. Now, just talk really brief about the fundamentals. As you know, if you're following any of the fundamental news last week, we had the Brexit vote fail in the UK in the House of Commons, House of Lords. It failed. Theresa May's compromise deal failed. And the pound immediately sold off on that news, and then almost as soon reversed. I think that's probably this candle right here. The news came out, it went down, and then it immediately started turning back up. And really, because the market has been beating up on the pound for so long now, I think it was pretty much priced in that that the vote was not going to pass. So it's the old, sell the rumor, buy the fact in this case. So the market was selling leading into that news, figuring that, it was going to fail. And then when it did, the market had kind of exhausted itself and it turned back up. And, that's really because there really wasn't a lot more downside there. And it's also a little bit of optimism that they will eventually come to a deal, although it might not be right away. So, so it could be volatile, but I think that's why we saw fundamentally why it sold off initially and then turned back up. So let's see what happens from here. But at least technically on these Elliott patterns, that's what I'm seeing. And, I think the Aussie is a relatively weaker currency, not right now, not as weak as the Kiwi, but so I think that's a good pairing. And the Swiss, can go either way. That can sometimes be a neutral, as much as they're a neutral country, it can be kind of a neutral currency too, but it could be sometimes a flight to safety, risk off type currency too. So, but those probably aren't bad ones to pair it up with. So let's keep an eye on that. And again, it's very similar to the Euro Kiwi video. And so that's why I want to show it. And just again, when I talked about Elliott Wave rules, these are the 3 rules. Okay, so these you can never break and still have a valid Elliott Wave pattern. I talked about rules and guidelines. These are the only 3 rules that Elliott has, which is wave 2 never moves beyond the start of wave 1. So in this case, so if this is wave 1 in this drawing, and you have this correction down for 2, wave 2 can never come any lower than here. And so that's why it's a great methodology to use, because if you know that, then you just put your stop, you know, a little underneath it here, and you know if it breaks through and keeps going that you were wrong and it gets you out. So it gives you that good point of ruin. So it's a good place for you to stop. I wouldn't put it right here, but you know, give it some breathing room for a little wick spike. So that's rule number one. Wave 3 is never the shortest. So wave 3 does not have to be the longest, although it usually is, but it just can never be the shortest. So if you just measure wave 1, 3, and 5, that's what we're talking about, the motive waves. So in this case, 1, 3, 5, 2, and 4 are corrective waves. 3 can never be the shortest, although it usually is the longest, but the rule is it can never be the shortest. So that's another rule. And wave 4 can never enter the price territory of wave 1. So this move down is the corrective wave 4. And as you can see here, it did not break into the area of wave 1. So if it came all the way down here into wave 1, that would violate the rule. And then you're not looking at a true motive wave. Now, I'm not going to get into what that could be, because that could be something called a leading diagonal or an ending diagonal, in which case the waves can overlap, but that's a story for another day. And if you read the Elliott Wave book, the Elliott Wave principle book, you would find out what that is. And a leading diagonal or an ending diagonal is a valid pattern, but it only appears at certain times. But in general, wave 4 can never enter into the price area of wave 1, so it's a rule. So those are the 3 rules. As long as you remember these 3 right here, then you're good in terms of you know, knowing what you can and can't break. So here's a picture again into the area of wave 1. So this is not valid. Let's see here. Trying to see what else is in this little booklet here before I end this. This is just kind of shows you your setup. So here's 1, 2, 3, 4, 5. So that's the impulsive move up. And then you have an ABC correction. So this is kind of what we see right now in those pairs I just showed you, only it's the other way around. We have the 5 waves going down and the ABC going up. But it's the same thing. It's just flipped over on its head. This is a bullish wave with a bearish correction. What I showed you was a bearish wave with a bullish correction. So, but it's the same thing. And there's your basic 5-wave pattern. And as I also told you a few minutes ago, is that inside of these waves are smaller waves. So wave 1, let's say this was a daily time frame, and you see this wave 1, you go down to like a 4-hour time frame, then you would see the 5-wave structure that makes up this wave 1. Okay. And wave 2 is a 3-wave move down. So if you go down to a lower time frame, you should be able to see the 3 waves that make up wave 2. Same thing with 3, it's the same as 1. 4 is the same as 2, and then 5 is the same as 1 and 3. So that's kind of how that works. All right. So yeah, this is a booklet I have, but I just wanted to show you that. So anyways, guys, that's it. Don't want to belabor this. So again, let's keep an eye on Pound Aussie, Pound Swiss, Euro Kiwi over the coming, really probably over the coming few weeks. These are daily charts, longer term charts. These aren't going to happen overnight. These could go on for a while. So you're going to have to be patient with them, but I do think in the end these patterns are going to play out. So that's it, guys. Hope you enjoyed it. Again, comments, likes are appreciated. Sharing's appreciated. Like the channel, subscribe if you haven't, and click the little bell next to the subscribe button so that you get notified as soon as I post a new video. All right. Have a great rest of the weekend, a good trading week coming up, and I will follow up on these probably later in the week. All right. Thanks, guys.